The goal in this economic system here in America is to never run out of money. Whether you're preserving money that you've earned or whether you're borrowing money to grow financially, the goal is to never run out. If you can accomplish that goal, then the sky's the limit on what you can accomplish financially in this system. I want to talk to you about how to build the proper relationships and why they're so valuable to have with the greatest financial resource to never running out of money, and that's going to be banks. I'm going to teach you exactly, step by step, how you can create a network with financial institutions to make sure that if one bank can't serve you, another bank can, and making sure that you never run out of money. Before I do that, I'd like to give context on who I am and who you're getting this information from. My name is James Phillips. I'm a 13-plus year veteran at the time of this recording in banking and financial services. I have an active mortgage originator's license in my state, active life insurance license, active FINRA Series 6 investment license, and small business certified. I function in a retail branch, basically as what most would call a relationship banker, a private client banker in some cases, and also a small business specialist. So essentially what I am doing is helping everyone from the working class on the consumer side up to the affluent, emerging affluent. So think 6-7 figures. And I'm helping small businesses and small business owners that are starting out from scratch all the way up to 6, 7, and sometimes 8 figures in revenue. So you're getting this information from somebody who literally directly works hand in hand in the industry actively. I also operate a small business. I've attained a pretty significant amount of capital for my small business in a pretty short window of time. Thanks 6 figures in about a year and a half. I have great personal capital, a net worth of 6 figures. My FICO score is a 760 plus. I've worked myself out of a negative net worth. FICO score is below 515. So I've come from a long place in putting this information together and getting the actual hands-on experience. That having been the case, what I've learned is that financial institutions, banks in particular, are some of the greatest connectors, the greatest network that you can form when building out your finances. We talk about network when we talk about meeting other individuals, business owners, influencers, etc. Very seldomly do you hear it decorated or described that banks as institutions can be a network for you. And what I want to describe to you now is basically how forming a healthy relationship with one or more financial institutions can spread out into great networks of other financial institutions and other economic resources that you can use to ensure you never run out of money. So when we think about this from the deposit side, you want to start a relationship with financial institutions where they want to do business with you. I've shot tons of videos on how to accomplish that. But if I were to surmise it here, you want to be identifiable, verifiable, bankable, and lendable. You want to walk into a financial institution or develop as early as you can with that financial institution the image in mind that you are going to be a long-term, low-risk, profitable client. When you accomplish that, banks will roll out the red carpet. They will make sure the right personnel is working with you and that they stick to you. You become an asset to that financial institution, and they will work very hard and pour a lot of resources into making sure that you don't ever leave and that you do as much of your banking business with them as they can service. When that is accomplished, this is where the network component starts to branch out. But how do you accomplish that image in the eyes of the bank? Well, you have to make sure that you provide who you are. So you want to be identifiable. You want to be verifiable. So you're not falling into the bucket of someone who's suspicious, a potential fraud, or a potential threat to their financial organization. So you want to make sure whoever you provide that you are or your identity is verifiable. This means that if you provide them a name, date of birth, address, job description, income, asset level, etc., whatever you're providing them, when they go to run a background check on you, it checks out. From that point on, now you're branching into bankability. This is going to be where you have a good, sturdy income, a consistent income. You have great cash flow, meaning that you make good money, you spend money, but you spend money in ways that are understandable, that are identifiable, and that do not exceed your income. You want to have a healthy surplus in cash flow. You want to have good savings, good reserves. And when you branch out from that point in time, then you're going to graduate into what's called lendable or lendability by some of the more earlier pioneers in the financial services space. We kind of have dubbed it lendability. It basically means that I know who they are, I verify who they are, they have great management of their own money, and I'm ready to lend them my money to grow. So once you check those markers off, then you are pristine in the eyes of the bank. You're an asset that they're not willing to lose. Once that happens, when you start to have additional needs for your money, so when you start to think about never running out of money, the money you earn and that you save, your goal is to preserve that money and to continue to grow that money from some type of earnings, some type of interest. This can be deposit products or investment products. The bank is going to go out of its way to make sure that you are preserving your capital, and from that point, you're growing it based on your risk tolerance and your financial goals. That could be something as basic as a high yield savings account or a CD. It can go into a money market account account. It can go into a bond fund. It can go into an annuity. It can go into the stock market, conservative or aggressive in the stock market. This list goes on. The goal is that financial institution is going to say, okay, they're depositing with us. Now the goal is to find out how can we continue to make sure their money grows? Because if their money is well serviced, they're going to continue to bank with us, and they'll continue to make sure as they grow financially, they'll bring more of those deposits and those assets here. That increases the books for the bank, and they can do more of what makes them money, which is lend. So they're going to deposit it, and if they have the capacity or the capability, invest as far out for you as possible. On the earning side, on the deposit side, that is what never running out of money looks like, because as your deposits accumulate and they begin to earn interest and grow it as an investment, that means that you're ideally never touching your capital. When we go to the lending side, this gets even juicier, because what happens is now you're an asset to the bank. I say it all the time. As a depositor, you're more of a liability. As a borrower, you're more of an asset. Now, once you get on the lending side, that bank is going to roll out every single product and service available. And especially if it's more of a smaller or regional bank that has a little flexibility, there's occasions where they'll nearly create products for you, or they'll bend underwriting for you once you're a real valuable client. Now, you can still leverage this with high-ranking financial institutions, your Chases, your JP Morgans, your Citis, but at the end of the day, you have to have a lot more assets to make this happen. So if you're more on the 4, 5, 6-figure net worth range or 5, 6-figure income range, then you're going to want to leverage this strategy with more local and regional banks, because those assets can still play a big value on their books. When you go to borrow, whatever your financial goals for borrowing may be, which you need to define them, they need to be clear, because the bank can't really service you the way I'm talking about if they don't know where you're trying to go. So if you're trying to grow a small business, if you're somebody who works a W-2 or enjoys your career, but you just want to grow assets, you want to acquire real estate or buy other businesses, buy in on other businesses, but not have to operate them, and you need capital to reach out for those assets, then that's where the bank is going to start rolling out the red carpet on any type of lending they can offer. It gets juicier, because what happens if they can't offer that particular lending capacity you need, or your portfolio or your profile, rather, not portfolio necessarily, but your profile doesn't quite meet what they need, but they still see you as a very valuable client, what they're going to do is start to expand you out or shop you out to other networks of financial institutions that they have relationships with that they know can't necessarily steal your business. So a good example of this is going to be a major regular financial institution reaching out to a CDFI partner that they have. These are going to be basically more like nonprofit institutions that are lending, that are going to have lower criteria for lending, that are going to have diverse product pools, and they're not banks. So there's not a risk of them stealing your entire relationship. When you look up CDFIs, they're basically going to be institutions that give you that founding push when you don't have a fully lendable profile to a major financial institution, or maybe you do, but that particular financial institution just doesn't offer the products or the scale that you need. CDFIs are going to be those gap fillers in the lending world. Banks partner with them all the time, and believe it or not, if you get into the weeds, banks fund CDFIs all the time. They directly put money on the books for those CDFIs to be capitalized to lend on products that may not fit their mainstream product lineup. So what happens is that bank says, well, I don't want to lose your relationship. I'm going to branch you out to another network of institutions or financial resources. This is an example, again, of CDFIs, sometimes even brokers, general independent brokers, and they know that they can't steal your business. They can only add value to the overall relationship. And if banks can't directly service you on their books, in order to protect that relationship, they're going to just shop you out to quality financial resources that can't steal your business, but can still fix your problem. From that point, it goes into tax planning. The next component of never running out of money is not having the money that you've earned taken away. And that's going to be really impactful with taxes. So financial institutions, the quality ones, the bankers there, the branch managers, the lenders, they're going to have great relationships with CPAs and tax planners and tax professionals. It never fails, because there's a joint relationship, a conglomerate that we're able to put together as financial professionals where we all service the same clients. And that's where the banker or that financial institution is going to shop you out or recommend you to quality, well-vetted tax planners. And when that happens, now you have this ecosystem where every dollar you bring in is now earning on the deposit investment side is leverage to get you access to more capital to grow your assets or grow your financial position or grow your business. And then on top of that, you're now being branched out to a tax professional that's making sure all this money that you're earning and borrowing is not taxed to the best of their ability. They're gonna make sure that you're not writing 5 and 6 figure checks out from all this hard work you've done to accumulate deposits, grow those deposits, borrow money, use that borrow money to get access to more financial resources and assets. And now the tax planner comes in, put the icing on the cake and says, okay, cool. Now we're gonna make sure that you depreciate in a healthy way, that you deduct in a healthy way that continues to allow you to expand and grow financially as a business owner, a W-2 worker who's an investor on the side, etc., a solopreneur, but minimizes the check, if at all, that you have to write to Uncle Sam. This is where you never run out of money. This is where banks can be the foundation because, again, there's a somewhat of a fiduciary duty. There's a vested interest in making sure that your relationship is sustained and it grows. So now there's a trust network there. There's okay, I can trust their recommendation. The partners that they're connecting me with, the financial professionals they're connecting me with are highly likely, you got to do your own due diligence, of course, but are highly likely going to be verified professionals. And this is going to expand your financial means and create an ecosystem that protects you and grows your financial net worth overall. So this is kind of a micro breakdown of how you never run out of money and how you use banks and other financial professionals, because it branches out from there. Even insurance branches out into this. But I like to keep these videos concise at the moment. I'm going to be going into longer form content, breaking down these exact same concepts in more depth in the near future. But I want to kind of tease your brain into how you can take your existing financial position. What banks can you partner with? What networks can they branch you out to that can take your financial position and accelerate it, can preserve what you've done right and accelerate and grow your position in its capacity now, so you can go from one place to the next, seamless, minimal losses, minimal mistakes, with a healthy network of financial professionals that you can hopefully keep for the rest of your career. I want you to comment down below and let me know, is this brand new to you? Are you already exercising a strategy like this? Do you have examples of where your existing bank has partnered you or connected you with other great financial professionals or entities or financial resources just to protect the relationship with them, and how that's helped you advance financially? Comment down below. Let me know what questions you have. This may be new to you and you're trying to figure out, this sounds enticing, but how does this work more? Comment down below so I can assist you further. Other than that, any additional thoughts and comments, put them down below. To all my pioneers, welcome back. To my new viewers, welcome in. I want each of you to continue to support this channel so this channel continue to support you. So that means like, comment, share, and subscribe. Other than that, I want each of you to stay focused, stay in motion. I'll see y'all soon.